So if you want to know what the true fundamental value of an ounce of gold is, you simply take all of the debt that's ever been created. I do it globally because this is a global issue. And the last time I checked, it was like $313 trillion in debt that had been created. And we're not even talking about the derivative bets on top of that, but just go with that for a minute. There's an unlimited amount of debt that can be grown, but there is a finite amount of gold. So you just divide the debt by all the gold that exists in the whole world, because gold is indestructible. And the Department of the Interior of the U.S. runs a study on an annual basis of how much gold and how much silver is above ground, so has already been mined, and is in ground, so is yet to be mined. And so if you simply divide the amount of gold that exists by the amount, or the amount of debt that exists by the amount of gold that exists, that gives you somewhere north of $40,000 an ounce. But people put value in this. So when they create that spot market, this is actually why they created the spot gold market, was to manage how you think about gold. And a rising gold price is an indication of a failing currency, but more importantly, a rising gold price is an indication of an imminent catastrophe. And so when you're watching the gold prices rise and you're saying why, the answer is that there is an imminent crisis, and I can't tell you exactly the moment. But why would somebody like Ray Dalio or somebody up at that level, because those are the ones that can afford to take delivery of 500 ounces of gold at spot, right? Those people are making the rules, know the people that write the rules, can influence the people that are writing the rules, and they are getting into position to weather this storm, because we are transitioning into a whole new financial, economic, and social system. And you're watching global central banks. I mean, this is really going to be interesting because we had a rash of gold repatriation after India in 2016 denominated, took their 86% of their currency out of circulation. And then again, we saw a rash of global repatriation after 2018. So we're seeing the same thing again, a little bit differently though, because they're doing it through the COMEX. They're doing it through the digital markets in the US. And then again, gold from it's not just the Bank of England. This is having a global impact on all of the physical metals markets around the world. And I keep asking, what happens if there is a global repatriation and these governments say, Bank of England, we want our gold back, and they've shipped it off to the US? What do you think happens then? And to the visible price of gold, but even to the invisible price of gold, because the only tool that they have is more debt. So that's the tool they have.
Can you maybe explain a little bit about exactly how this COMEX paper market system works? Because a lot of my viewers, we're a prepping channel, so we're not economists, and this is something which is kind of hard for people to wrap their head around, the difference between the paper markets and this rehypothecation that happens with this people who custody the gold. They're lending it out to different people, and they're sending out these IOUs. Can you explain a little bit about how that works?
Let me give it a shot. And it's because of my work as an economist that I became a prepper too, because, these transitions, on average, 80% of the population ends up in abject poverty. So it is global economy, or global community, but it's also local community. We'll come back to that in a second. But these guys know how to make this transition. And it was, so this was the money at first. This is a 1 ounce, $20 gold piece. Then they came out with this gold certificate, which you could redeem for gold. You didn't like what the government was doing. You could walk in the bank with this and walk out of the bank with that, pulling the gold out of the system and creating restrictions around what government could do. But then you also had this in circulation, the Federal Reserve note. So you had an ounce of gold, a $20 gold certificate, and a $20 bill, all operating in the economy at the same time, at the same level of purchasing power as dictated. So in 1933, when they took the public's ability to pull the gold out of the system, these two things went away and this was left. But they legalized the Federal Reserve in 1913. So for 20 years, these had been in circulation and people got used to it. So when these other two things went away, we really thought too much about it. 1971, up to that point, governments could still send in dollars and pull the gold out of the system. But they had done that so much that by 1971, we had less gold in deep storage than we did after the confiscation in 33, because in the 60s, there was a major run on the dollar, right? For other governments sending in dollars and pulling the gold out. Well, Nixon stopped that, but this, I could have these backwards. Okay, this one is 1969, right? So this is what I was used to. And actually, before we go there, let me show you this too. I don't have a silver dollar, but I have a half dollar, right? So silver was in our system. In 1965, our government started minting these, right? Taking the gold out of the system. They didn't, or not the gold, the silver out of the system. And they told the population that if they attempted to hoard that silver in this pre-1964, they're 90% silver, that the government would flood the market and crash the system. Incredible to me that a sitting president could talk about manipulating the markets and nobody said anything about it. This is crazy. This is crazy. But they said all of these will be circulating at the same time, at the same purchasing power value. And so eventually this went away and this was left and people didn't realize that anything had changed except that. And then in 71, Nixon disallowed other governments from pulling the gold out. Can you tell the difference between these two bills?
Not really, no.
Exactly. So we're told if you buy American products, you will not feel inflation. Well, I don't know. We're about 98% down. What do you think? You think people are feeling inflation?
Yeah, and it's so pernicious that, like you say, they kind of acclimate people to, they put both into the system, and then once you've kind of lowered your defenses a bit, they pull the other one away. Perhaps they're trying to do something similar with crypto, but we're talking about something that's been with us throughout all of history, really. Silver and gold up until, the 20th century were recognized as currency. I mean, they still are, the purest form of exchange around the world, but they've completely divided those two things. And here we are. Most people don't even realize what's what anymore. We're seeing the price of everything go through the roof. And now so explain maybe how does this system of the COMEX work in the paper markets and the real price of gold? Because they're lending out gold to different people that they don't have. Is that how it works? Kind of like fractional reserve?
These are contracts, right? I mean, JP Morgan actually said it the best. Only gold is money. Everything else is credit, right? So on the COMEX, these are just contracts, futures contracts, options, different things that are a promise to deliver gold, the underlying gold. Not everything is, but since it's just a contract, there's no limitations on how much gold or silver that they can create so to suppress the price.
Is there no legal restrictions on how much they can do?
No, that's the whole point. These are the guys that write the contracts. Did you read the contracts? No, they're this thick. Buy house. You know, how thick is that mortgage contract that you're signing? Here, sign here, sign here, sign here. Tell me how many people you know that actually read the contracts. You go on the internet, you want to go on a channel. Okay, well, you've got to okay that you're going to adhere to our policies, and it's itty bitty writing. This big people don't read these contracts. So it is absolutely legal, because even though everybody always knew about the revolving door between Wall Street and Washington, today it's like there's no even thin layer over that, right? So if you have these guys that are writing the laws, who are they going to write them for? Themselves or you? It's going to be their best interest, right? So no, there are no limitations on how many contracts. And in fact, it was 2009. Central banks really didn't work too much in the derivative markets. Now, for those people, just really simply put, a derivative is a big fat bet. You cannot convert those derivatives, it depends on the kind, but you really don't convert it to the underlying asset. It is just a bet on the price movement. Okay. So prior to 2008, central banks minimally played in that market, maybe for foreign exchange to support a currency or something like that. But in 2009, before they changed the accounting, that's what governments always do. They don't change behavior. They just change how they account for it. With my own eyes, but before I knew how to do print screen, unfortunately, I saw and counted for every 1 ounce of physical gold, there were 62,000 derivative ounces of gold. That is gold that does not nor ever will exist. And that was 2009. Those numbers would be much, much higher now, but they've come up in 2013 with netting and this, all of this stuff, so that every single entity agrees. So you're talking about the Bank for International Settlements, the FDIC, all of the global central banks, the IMF, International Monetary Fund, which is all of the heads of all treasury secretaries and all central bank heads. Every single one of them agrees that they have no idea of the true value that is at risk in these contracts. And they say this too because they've made it so complicated that not only can the average person not understand it, and I want to go back to that in a second, but the people that create these complex transactions they can't track them or understand them either. We see this much of the tip of the iceberg. I don't care about what we see up here. It's all this stuff that we cannot see that is going to make the difference when it explodes. And that's why most people don't see these things coming. But if they can create 62,000 ounces for each ounce, don't you think that's going to have an impact?